Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is March 21st. Today we're going to take a look at Academy Sports. This is out of the consumer discretionary sector. Let's jump right into the video. And if you'd like to help me out or are new to the channel, if you'd hit that thumbs up button down below, if you find any value in the content, hit that subscribe button, join us on this journey to financial freedom, join the Vested Interest community, hit that notification bell so you're notified whenever we put out any new content. Drop a comment, let me know what you think, and share with anyone you think that might find value in this content. On this channel, we cover dividend growth investing. I do stock pick of the day videos like this Monday through Thursday when the market's open to take a look at a stock that's pulled back. That's what we're going to do today with Academy Sports, so let's keep rolling. And this is the Vested Interest stock screener. This is how I look at a company on a high level to see if I'm interested. Just because it meets 5 of 8 or 6 of 9 doesn't necessarily mean I'm investing. It just means it goes into my watch list, and then I do more of a deep dive, try to figure out a price I'm willing to pay for the stock. And then maybe I add it to my portfolio, or if it's one already in my portfolio, it's a way for me to check to make sure it still meets the criteria that I've set up. Don't just blindly copy this. This is for me. I'm in my mid-40s, so I might have different investing criteria and a different timeline to retirement than you do. You can definitely use this as a starting point or give you some ideas. No problem there. Just don't blindly copy mine or anyone else's for that matter. Investing criteria. Make sure you're setting yours up for yourself based on your age, how long you have for retirement, excuse me, and what your overall goals are. Now back to Academy Sports. You can check them out at www.academy.com. That's www.academy.com. That is their homepage where I pulled this information from. Company overview. Academy Sports and Outdoors is one of the nation's largest sporting goods and outdoor stores with 283 stores and counting. We offer a broad assortment of quality hunting, fishing, and camping equipment and gear, along with sports and leisure products footwear, apparel, and much more. Academy is headquartered out of Katy, Texas, a suburb of Houston, Texas. You can read the rest of this here, and you can see, again, menswear, women's wear, kids wear, fan shop. So if you want to pick up your local sports team or your favorite sports team's jersey, favorite player's jersey, they have those type of products. Shoes, pools, outdoor living, play sets, hunting, camping. They're a sports and outdoor store. That's what they do, kind of like a Dick's Sporting Goods or another place like that. And the reason we are taking a look at them, down 9.57% on the day, huge drop on the day. You can see that drop, right? That's a huge drop on the day. It looks like they tried to recover a little bit around 10, but overall, just big drop. We are talking about Academy Sports and Outdoors, ticker ASO, out of the consumer discretionary sector. Close out the day at $64.43, 52-week range as low as $42.83, as high as $75.73. They're, I would say, floating midway between their 52-week high and their 52-week low, maybe leaning a little bit towards their 52-week high there. It looks like they're up a little bit in the after hours here, at least as of 4:17 when I pulled this information. Average volume 1.1 million. Today was 8.5. Just that's a sell-off. That's everyone jumping out of this one. That's what that is. Market cap of 4.77 billion. So they are a small cap company. Beta of 1.38. So they are more volatile than the overall market, and you can see that volatility throughout the day here. PE ratio is low at $9.97. Now you would again want to compare this to like a Dick's Sporting Goods, companies like that, to see if it's in line with what their PE is. But that is pretty low overall, just as a general rule of thumb. Anything under 15 typically is considered undervalued, or at least under the overall market. Right now, I think the market's around 20 or 21 PE, so this is really low. EPS sitting at $6.46 per share. Next earnings date coming up, well, that was today, so that's probably what happened. We probably had a bad earnings or bad forecast here. I have not looked at the earnings report, so if you're interested in this company, you definitely want to go look at that, but it looks like something negative really hit the news today. Forward dividend is 44 cents. They are quarterly payer. Now they have not been paying very long. We will see that here in a little bit. Very low starting yield, 0.62%. So not only low starting dividend, but low starting dividend yield, very low here. Ex-dividend date March 25th. So it is coming up next week. If you were to buy them now, or at least the 24th or before that, so either tomorrow or the first day of next week, you would be in line for the next dividend payout. If you buy them on the 25th or after, you'd have to wait for the following. It looks like they're going to pay out in April 18th. 1-year target estimate, $77.81, at least according to Yahoo Finance, where I pulled this information from. Not affiliated with Yahoo Finance, just one of the sources I go to for information. Now, if you were to go to Yahoo Finance, over here on the left here, of the chart, you would see a bunch of tabs. We're going to go to the statistic tab, go down to the dividends and splits. We're going to look at 5-year dividend yield average and try to see if dividend yield theory tells us if this one is undervalued. Now, unfortunately, this one has only been paying a dividend, I think it's 3 years, maybe 4 years now. So it does not have a 5-year dividend yield average. So we can't really use dividend yield theory, but it does have if you look at the trailing annual dividend yield of 0.51%, it is currently higher than that. If you wanted to use that as a little bit of a metric, it is at least higher than what it was last year. And until they hit that 5-year mark, dividend yield theory is not going to work for this one. Now, payout ratio, extremely low. This is one of the lowest payout ratios I've seen, and partly because they just started paying a dividend, right? 5.34%. So under 10% is extremely low. I like under 75%. So this is very, very low for what I would be looking for. Now, if you, again, would to go over to this tab here on the left-hand side, you'd find a financials tab. You go in there, there's a lot of good information. You can find their balance sheet, their income statement, their debt to equity ratios. Is their assets over liabilities? You want more assets over liabilities? Are they paying down debt? Is their revenue growing over time? Is their margins increasing or are they decreasing? All good information that you should understand, and make sure you do that if you are investing in individual stocks. If you don't want to do that and you don't want to do the research, ETFs and index funds are probably more your cup of tea. That way you can just buy a basket of stocks and dump money into it and not have to worry about doing much research, right? But for our purposes, we're going to go in and we're going to look at free cash flow. We want growing free cash flow over time. Typically, if you have growing free cash flow, you have growing dividends, and we want growing dividends as dividend growth investors, or at least I do. I mean, maybe you don't. It's perfectly fine if you don't. Some people don't care about dividends, which is fine also. Going back to 2021, $970 million in free cash flow. 2022, they started repurchasing shares. So there's a bit of a drop, but a lot of that can be accounted for this repurchase of shares. $597 million in free cash flow, $443 million in 2023, still buying back shares. So I would say that really wouldn't account for the total drop there, and more of a drop in so far in 2024. Now, 2024 obviously just started, so we'll have to wait to see how this shakes out. I would say overall, I would call this flat, if not slightly decreasing free cash flow, right? So we want to watch the free cash flow, and we really need more years on this one. I would say, again, not having a 5-year dividend yield average is making it difficult for one of the big metrics that I use. And I'd like to see a little bit more history on this to be able to make a decision on where they're forecasting, how they're looking, what do they look like over the last 5 years, and then I could be able to intelligently look at this one a little bit better. But we have to look at the numbers we have, so we're going to keep rolling. Now we're going to take a look at stockanalysis.com. I always recommend more than one source. That's why I use the 2 different sources and I just want to do that so that I can make sure the information I am getting is accurate and up to date. And I recommend you do the same. You pick any sources that you like. You don't have to use the sources that I like. These are just 2 that I like. And 14 analysts that have taken a look at this, they call it a consensus buy. They have a low estimate of $52, which would be a 19.29% decrease from where it currently sits. Average estimate of $73.07, which would be a 13.41% increase from where it currently sits. And a high estimate of $88, which would be a 36.58% increase. All the while, you could collect that small, less than 1% dividend yield there. I think it was 44 cents per share. Now, we're going to get into statistics here. We're going to look at how efficiently this company is investing back into itself. I like return on equity of 10% and return on invested capital of 10% or better. And this beats both of those numbers. Return on equity, 29.7%, very nice. Return on invested capital, 14.6%, very nice. Numbers look very good. EPS, I like 5% or better, forecasted growth over the next 5 years. They're almost double that at 9.25%. Like that as well. And revenue growth forecasted at 5.18%. That's just an extra I like to throw in there so we see, are they projecting forecasted revenue growth? To really get an idea of how the revenue growth has been doing, you'd go into statistics and you'd look at the current revenue growth over the last 4 or 5 years. And that's part of the reason I like stockanalysis.com. They go back further in time. If you go to the statistics tab, they go back, all the way to the beginning of a company, or I think it's maybe 10 years or something, a lot further than Yahoo Finance does anyway. Yahoo Finance usually goes 3 or 4 years, and that's it. So let's take a look at the dividend history. We don't have a long dividend history to look at. They are a quarterly payer. Again, this says 6.81%. I think 5% is what Yahoo Finance says. Again, that's why I like more than one source. Still under 10%, very low payout ratio, dividend growth of 20.63. That's where they're making up for it, right? Low payout ratio, but very high dividend growth, especially if they maintain this dividend growth. So they are enticing you a couple different ways as an investor. They are repurchasing shares. they also have very, very high dividend growth. Now, that's not to say they're going to maintain the dividend growth, but they definitely have room to do that with such a low payout ratio, especially if they keep buying back shares. You're getting it on both ends, buying back shares and high dividend growth. So that's a good combination. I really just wish they had a little bit more time to go back. Again, 2022 is when they started paying out dividends, right? So they were only at 0.7 cents here and a fraction of a penny. They raised that up in 2023 to 9 cents, and they raised that up most recently here in March, 11 cents. So very fast dividend growth. If they maintain that, that would be very, very good dividend growth, and you could get in on the bottom floor of this one. I will say companies like this are susceptible to big pullbacks if we have recessionary times or enter into a recession, right? People aren't going to be going out and buying basketballs and new basketball shoes and hunting gear and camping gear if they're worried about losing their job, right? All right. So that is really it for this one. Let me know what you think of Academy Sports down in the comments section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. That's what this channel is all about. I'm going to share my experiences with investing, so hopefully you can learn something. And for those of you who have not started your journey, maybe it will give you some motivation and encouragement to do so. That's what this channel is all about. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Academy Sports that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And just a reminder, folks, next week I am going on vacation with my wife and my kids, so I will not be doing the Stock Pick of the Day series. I will be back with my Sunday update this week as well as next week, because I think we're coming back Thursday night, so I'll be able to jump into the market Friday before it closes up, or Thursday while I'm on vacation. I'll probably just buy stocks one day that week, and I'll at least cover what I bought for that week on that Sunday update video. I won't miss that one. I'll just miss the ones throughout the week. With that said, this is Shane signing off. Wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you had a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest. Any amount not comfortable losing. Always do your own research. Investments in your situation, circumstances, and select criteria, or seek the advice comes from a certified financial advisor.